Good morning. This is Horizons Middle East and Africa. Our top stories this morning. U.S. futures rally as Nvidia's upbeat outlook reinforces optimism for the global AI boom. Meanwhile, South Korea unveils $19 billion of funding for its own chip industry. The rest of Asia, meanwhile, in the red after Fed minutes show officials are in no rush to cut rates. Plus, the UK heading to the polls. Prime Minister Rishi Sunak gambling on a snap general election on July the 4th. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. Let's get a market check on how some of these key financial indicators have reacted into and out of course, those Nvidia earnings that came through. So, as you can see on the boards, the futures, S&P futures are seen opening up in positive territory, 0.6% higher this morning. Similar theme for Nasdaq, up 0.9%. One stock in focus, that is Nvidia, traded up around 6%. And after hours, we will be talking a lot more about that and how they broke through their earnings expectations to the upside. But Asia Pacific dragging somewhat, trading sideways. Some of the positivity surrounding Nvidia has been dampened by the commentary that came out of the Fed yesterday. The minutes suggesting that many officials still want to keep rates higher for longer. So raining on the parade of those who had expected imminent rate cuts. And then finally, gold also dropping after those FOMC minutes came out as well. In terms of Nvidia, though, let me just show you one chart that I think is quite interesting. We are going to talk about a lot of the optimism and the good news that came out of these earnings. But one thing to bear in mind is the supply outlook. So it's interesting to see here that the company has started to get more orders that it can actually supply, raises a question about how much scale they can actually go for in terms of meeting the demand that's coming through. So big question there, and perhaps one of the concerns surrounding the stock in the future. We'll talk more about that in the show. Let's also check in on how markets in Asia are faring. Avril is in our Singapore studio, and Avril, not a lot of green on the board, I would say, today compared to what we have in the U.S.
Yeah, I think it's a bit of a mixed bag after that stellar scorecard from Nvidia. That's helping to lift the Nikkei, which is outperforming today. But on the CSI 300 and Hang Seng, you can see that drag. Across the region, investors are digesting those FOMC minutes, those hawkish signals. But it's also, keep in mind, geopolitical angst that's in the mix as China is holding its biggest military drills off Taiwan in a year. On the Hang Seng, the likes of Alibaba, Tencent are the big drags. In the CSI 300 is the material stocks that are declining. Let's flip the board and take you to what we're seeing among the chip names on the back of those earnings coming in really good from Nvidia. That's helping its suppliers, TSMC and SK Hynix, and a bit of a double tailwind for the South Korean chip makers after the government unveiled a $19 billion package of support for the industry. This was more than double what was proposed a couple of weeks ago, really to help keep these chip makers in South Korea competitive. Jumana.
Avril, thank you so much. It seems to be all about chips today. Well, speaking of Nvidia, the chip maker at the center of the AI boom, surged in late trading after shattering expectations and delivering a bullish sales forecast. The CEO, Jensen Huang, further stoked the excitement by talking about the dawning of a new era.
The next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the trillion-dollar installed base of traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence.
And here's Bloomberg technology anchor Ed Ludlow, who has more on the blowout results.
Nvidia is supply constrained, meaning that demand for its AI accelerators is still outpacing its ability to supply. So when you look at the guide for the fiscal second quarter, sales of $28 billion plus or minus 2%, it's also interesting to look at where that demand's coming from. The story to this point has been Nvidia selling high-performance GPUs to the hyperscalers, those 3 or 4 big names that operate the data centers behind cloud computing. But that's changing. They're starting to do business with consumer technology, enterprise, government customers, and the market for generative AI in that sense is growing. The 10-for-1 stock split effective June 7th is also interesting, right? This is a stock that trades north of $950 a share. There's a lot of interest out there from the retail investor in the AI story in Nvidia. You just need to take a cursory look at Reddit or X or even Google Trends in real time during the earnings call, and it's what people are talking about. Beyond that, the big piece of news probably was that we will see meaningful revenue, a lot of revenue from Blackwell this year. Blackwell is the combination GPU, CPU, the latest generation of AI accelerator from Nvidia that's becoming much more of a systems vendor, really. But the chips will start shipping in the current period, ramp in the fiscal third, and actually go into data centers in the fiscal fourth. And Nvidia's proving that if the demand's there, it can also keep up in terms of just innovation, bringing a new product to market at a cadence of one a year. All eyes continue to be on Nvidia. This is Ed Ludlow for Bloomberg News in San Francisco.
Moving on to our top Middle East story today, Israel has recalled its ambassadors to Ireland, Norway and Spain after the European nations announced they would recognize a Palestinian state. Around 140 nations already do so, but very few are in Europe. Ireland, Norway and Spain plan to formalize their recognition on May the 28th. The internationally recognized Palestinian territories cover the West Bank, including East Jerusalem and the Gaza Strip. Bloomberg's Middle East economy and government editor Paul Wallace joins us for more. Of course, one of the questions exactly how to define what the Palestinian state looks like at this point. But that aside, this was a big move yesterday. How significant is it in the context of moving forward towards ultimately this two-state solution that has been tossed around for the last 20, 30 years?
Ajimana, I think this move by Spain, Ireland and Norway certainly was significant, and we could see that, if nothing else, in the Israeli reaction. As you said, it recalled its ambassadors to those three countries. It reacted very angrily. It said that they were effectively rewarding terrorism. The Israeli viewpoint was that this is something that is in favor of Hamas. Those three countries said, no, that's not the case at all. It was a move in favor of the Palestinians, and it wasn't anti-Israeli in any way, and certainly not pro-Hamas. Having said that, Hamas did put out a statement praising the move, as did the Palestinian Authority, which nominally controls Palestinians in the West Bank. How much it actually changes things on the ground is very unclear. We didn't get much of a reaction from the US. The US also backs a two-state solution, but it says it can only come about through direct negotiations between the Israelis and the Palestinians, and not unilateral actions by the Palestinians towards statehood. But certainly it's symbolic. It is the kind of thing that maybe makes it easier or tempts other countries in Western Europe and the West to follow suit. That we'll have to wait and see.
Yeah, and of course the Israeli response was pretty quick. They recalled their ambassadors to Ireland and Norway. Also keeping an eye on the funeral for President Raisi in Iran. I thought it was interesting yesterday that the Supreme Leader, the Ayatollah, led some of the prayers in the funeral, but then also who was actually there. You spoke of Hamas. Ismail Haniyeh was there, the leader of Hamas.
Exactly, the political leader of Hamas, who's based in Doha in Qatar, he was there, and he actually got a bit of a hero's welcome on the streets of Tehran when he went down. There were big crowds, and he seemed to get a lot of praise. Also, interestingly, you had the foreign ministers of the likes of Saudi Arabia and the United Arab Emirates at the funeral. And that's quite telling. While, of course, they're not the most senior leaders of those countries, for them to go to a funeral for Iran, which they've had very, let's say, tense ties with to varying degrees in the last decade, knowing that leaders of Hamas, and not just Hamas, leaders of Hezbollah were going to be there too, it says something about how Iran has managed to keep or even build a group of close allies despite everything that the US and the West has done to try and isolate it.
I thought it was quite symbolic. The fact that the Saudi foreign minister actually went and attended that funeral does tell you a lot about the state of their relationship and how they've managed to evolve in the last couple of years. Paul, thank you very much for bringing us the latest. Paul Wallace, Bloomberg's Middle East economy and government editor. UK Prime Minister Rishi Sunak has called a snap general election for July the 4th. It sets his Conservative Party up for a bruising 6-week battle, trying to stop Keir Starmer's Labour Party from taking power.
Now, is the moment for Britain to choose its future, to decide whether we want to build on the progress we have made or risk going back to square one with no plan and no certainty. Earlier today, I spoke with His Majesty the King to request the dissolution of Parliament. The King has granted this request, and we will have a general election on the 4th of July.
Oh, Bloomberg's Lizzie Burden has more from London. Lizzie, I've got to say, it might be unfortunate for the Prime Minister that so many people are going to remember the optics of him being drenched in the rain as he announced this snap election yesterday. It probably takes away from a lot of the key messaging that he wanted to give to the public. But I think one of the takeaways is that this election is coming a lot sooner than people had anticipated, even within the Prime Minister's own party.
Yeah, it's fair to say that he got absolutely soaked in one of his fancy suits, and one of the protesters was blaring the old Labour victory anthem, "Things can only get better." But this morning, the papers have been joking that things could only get wetter for Rishi Sunak. Look, why has he chosen July the 4th? Many in Westminster were caught off guard, including the Chancellor himself, but it's allowed Rishi Sunak to put a pin in all the speculation of when this election was going to come and the speculation about who was going to lead the Conservatives into it. It's also no coincidence that he announced it on the day inflation fell to 2.3%. In his eyes, that's back to normal, even if the markets disagree and they think inflation is so sticky a June rate cut's off the table for the Bank of England. He also will have had an eye on the poll gap, and Labour's lead was not shrinking. So uncharacteristically for Rishi Sunak, he's taken a gamble.
So these polls, I think, are quite significant. As you say, they're not really budging. Conservatives are about 20 points behind Labour. What are some of the major themes that are going to resonate with the electorate going into July 4, you think?
Yeah, it's interesting that you mentioned the polls, because Starmer's got to convert that poll lead now into votes. But because of the absolutely dismal performance of his predecessor, Jeremy Corbyn, in 2019, he's got to execute the biggest electoral turnaround in post-war history just to get into power. How's he going to do it? We expect the campaign to focus on the economy, which is unusual, perhaps, for Labour, taking it to the Conservatives on the Tories' traditional homeland in terms of policy, and both the parties are focusing their narratives on growth. But Starmer's going to be banking that voters have not forgotten the Liz Truss era, in particular its impact on their mortgages. And the fact is, even though Rishi Sunak has presided over a period where inflation's fallen from 11.1% to 2.3%, as I say, the polls have not narrowed.
Lizzie, thanks for all the context there. I look forward to your reporting the rest of the day. That was Bloomberg's Lizzie Burden in London. And up next, we speak to Ayesha Tariq of MacroVisor as markets react to the Fed minutes confirming that officials are in no rush to cut rates. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Markets this morning broadly lower after Fed minutes show that officials are in sync around holding interest rates for longer. Let's bring in Ayesha Tariq, MacroVisor Co-Founder, and maybe the big story overnight, other than Nvidia, of course, were those Fed minutes, which actually came out before and earlier on in the session. And I thought one line was particularly interesting, showing that many officials thought it would take longer than previously anticipated for them to gain greater confidence that inflation was moving sustainably towards 2%. They're still being pretty cautious, aren't they?
They are. Good morning, Giovanna. First time on the news show. Thank you for having me.
Wonderful to have you.
So, yes, they are still being cautious, and that's a good thing. Okay, because we do still see upside risks to inflation. So we do agree with some of the things some of the Fed speakers have been saying over the last couple of days when they're talking about, upside risks. We see, so we've done some research. We're seeing shelter inflation picking up again. And it's because, home prices have picked up quite a bit, actually, since last year. And that kind of predicts where shelter is going. And as you know, shelter is the largest part of, inflation.
Yeah. I mean, I saw in your notes that you had that view towards the end of last year. You thought that inflation was going to re-accelerate.
That's right.
Hasn't actually re-accelerated, but it has been quite sticky, especially if you look at core CPI and the sequencing the last couple of months. What do you think would be the catalyst for it to actually start moving higher again?
So, for one, shelter inflation again, but also I think, commodity prices are still very sticky and high. Plus, we're also seeing wage inflation coming in quite sticky. Yes, we've come down from the peaks, but it's still not where it should be, right? So we're far away from pre-pandemic levels. So everything considered, and we're going to see some tough base effects going forward in the next couple of months. So I think we have a period of a couple of months where we see, slightly sticky inflation. And if the Fed can, hold through that period, I think that would be a good idea for them.
Yeah. So when are you penciling the first rate cut then?
So we had initially thought July because we thought all of this would be resolved by July, but now we're thinking more towards September.
Right.
We do think that the Fed may do an insurance cut here in September because they have other reasons to cut.
What are the other reasons to cut?
So, as you know, the U.S. interest rate or interest cost is huge, okay? Under the surface, we also have issues with, the economy. So labor is, the labor market is softening quite a bit under the surface. And then we also have, small businesses struggling. Now, I know the Fed is not in a position to, sort of help small businesses and help, the regular consumer. But at the same time, we're seeing record levels of credit card debt, and we're seeing, issues in the economy.
Yeah.
So everything considered, the Fed may think about doing an insurance cut ahead of the election.
Why is that not more of a problem? People always talk about household debt, credit debt in the trillions, the fact that U.S. outstanding debt also is at record highs. And yet it's not really having an impact yet on funding costs or on default rates or delinquencies. Why is it taking some time?
So delinquencies are rising, but you have to understand over the last couple of years after the pandemic, we've seen the wealth effect take over. So a lot of these people, they, refinance their loans. So they have a lot of equity in their homes, and home prices have gone up. So the equity portion has gone up. Stocks have also added about 12 trillion to the wealth effect. And so you have a situation where you have what we like to call a K-shaped economy. So you have the top 25% who are good, who are spending, and there's been a lot of pent-up excess savings, which are gone now. But then you have the bottom 50% who are actually struggling.
Yeah. Let me just ask you, in light of your views, some of the risks that you flag from a financial stability perspective and the fact that inflation is sticky but growth has started to slow down, what does this all mean for investing and where you want to put your money? Can stocks continue to outperform in that environment?
So that's an interesting point, actually. So what we're seeing is stocks are kind of being driven by flows, right? So, and the liquidity in the market. And we think that with the Fed tapering QT, that will usher in some more liquidity here. Plus, as I talked about the wealth effect, that's also another factor. And then you have fiscal stimulus, which is still ongoing. It's not as massive as it was before, but we do see some fiscal stimulus still in the system. And I think all of these can sort of drive stocks. So what we're seeing is kind of a divergence of the way stocks are moving from where the economy is going.
Yeah, well, there's one word that you didn't say that I need to mention, and that's Nvidia. To what extent is Nvidia and the whole AI complex more important for trajectory than what the Fed decided to do?
So I think what we're going to see now with Nvidia, so Nvidia's been doing great. They did well yesterday as well. This no surprise. But I think what we're also seeing is the market broadening out. Okay, so last year people were still very skeptical about the AI story, and I think for good reason, because we had this metaverse story before that, and that kind of fell flat on its face, right? And so people were kind of skeptical about, and don't forget, the AI story also takes away from people a little bit, in the sense that people are afraid about losing their jobs and things like that. So everything considered, I think people are starting to adopt the AI story gradually, very gradually. And so we will see this broaden out in the market. And once we start to see that, I think there will be a positive effect of AI on stocks.
Yeah, well, that's certainly interpretation, the knee-jerk interpretation to the market yesterday from Nvidia earnings. Thank you so much. Really nice to chat to you. That was Ayesha Tariq, the MacroVisor co-founder. Coming up as well on our show, the G7 meeting is getting underway in Italy. We'll discuss what's on the agenda for global finance chiefs next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Global finance ministers and central bankers are gathering in Italy today for the G7 meeting, which officially begins on Friday. For more, Bill Ferries, our senior editor in Singapore, joins us now. And Bill, it seems as though the funding and financing issue for Ukraine is going to be top of mind for the G7 meeting when it happens next couple of days. What are these finance ministers looking to achieve?
Well, the big issue on their agenda is a U.S. proposal that's starting to win some additional support to try to utilize the $280 billion of Russian central bank funds and assets that were frozen after Moscow's invasion of Ukraine. It's been a controversial issue because there's been some pushback on the idea of seizing and using these assets to help fund Ukraine. One of the proposals out there would basically tap the interest and revenue generated by that. So not touching the principal, but trying to touch the assets generated. That was about $4.8 billion last year. But what the U.S. plan would do is go further and actually try to tap expected future revenue. And that's where I think a lot of the discussion is going to take place between these finance ministers gathering in Italy.
Bill, fascinating to see how those discussions are going to evolve. And also it does become a slightly thorny topic legally as well on what the freezing of these assets would mean for other investors should they decide to go down that route. So I expect there to be a lot of conversations around the legal wording of how it's done as well. Bill Ferries, our senior editor in Singapore. And speaking of G7, we will be live in Stresa, Italy, covering the meeting. And we have a number of key newsmakers lined up that's going to happen in the next couple of days. Before we head out to the break, a quick look at how futures are faring. And Nvidia, the focus, the stock was up 6% in after hours. And that is really panning out for some of these main indices into the U.S. session. S&P futures up 0.6. NASDAQ, no surprise, up almost 1%. Also, coming up, we take a deep dive into the UAE's economy. Our next guest says the booming tourism and hospitality industry is a major driver. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. U.S. futures rally as Nvidia's upbeat outlook reinforces optimism for the global AI boom. Meanwhile, South Korea unveils $19 billion of funding for its own chip industry. The rest of Asia in the red after Fed minutes show officials are in no rush to cut rates. Plus, the UK is heading to the polls. Prime Minister Rishi Sunak gambling on a snap general election on July the 4th. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Quick market check for you. Nvidia, the main story yesterday, blowing through their earnings on both sales and outlook. And on the back of that, we are seeing a positive momentum pan out through to some of these U.S. futures. S&P futures leaning towards the green, up 0.6. NASDAQ also seen opening up about 1% higher. But Asia Pacific, more of a lackluster session. We'll check in on that in just a moment. And then gold also moving lower. A lot of the commodities dipped lower after those Fed minutes came through yesterday, suggesting that many officials are reticent about cutting rates. So still quite hesitant to go for or indicate that they're close to start with the Fed cutting cycle. As for our terminal chart today, well, of course, we're going to focus on Nvidia after their strong earnings yesterday. But one chart that we thought was quite interesting is the demand versus supply outlook. So obviously, Nvidia is getting a lot of demand, especially from the data centers. That is a hugely growing part of their business. And yet one of the questions investors have is, can they actually match that demand in terms of supply? So there's a picture for that ratio. Inventory to sales ratio falls for the 5th straight quarter. All right, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio standing by. A lot more muted price action there, Avril.
Yeah, I think it's a bit of a divergent performance across the benchmarks in the region. If you take a look at Japan and South Korea, you're seeing that green coming through, the Nikkei being lifted by the chip-making related stocks after Nvidia. In South Korea, it's just flipped into the green following that announcement of that support package for the industry, the chip makers, $19 billion worth of funding. So these are the indices that are seeing that positive momentum. But on the CSI 300 and the Hang Seng, going into the lunch break with these declines amid geopolitical angst, China's holding the largest military drills off Taiwan in a year. We have on the Hang Seng tech stocks not doing well. The CSI 300 material stocks are the drag as copper prices continue retreating. Now, also the board, I also wanted to highlight what we're seeing in the FX space. There was a bit of concern among currency traders given the FOMC minutes coming in pretty hawkish and earlier declines on the Asia currencies, but they seem to be pairing that at the moment. The Bloomberg dollar index is also slipping slightly despite earlier gains. And I think feeding into the narrative of the resilience in the dollar, we actually today saw the PBOC coming through with its weakest yuan fix since January, allowing the renminbi to decline, but the likes of Maybank actually saying that, you know, this is seeing a muted reaction in the market because traders still believe that the PBOC has still this tight grip on the currency. This is what you're seeing across the pairs today. Jomana.
Excellent. Thank you, Avril, for that overview. Now, turning to the economics of the region, the IMF this week wrapped up its latest talks with the UAE, declaring economic growth to be broad-based. It sees robust activity in tourism, construction, and financial services as key drivers. Happy to say that joining us now is Khatija Haque, Chief Economist and Head of Research at Emirates NBD. Well, it wasn't just the IMF having discussions around the UAE. We got a figure yesterday showing that GDP actually grew 3.6% in 2023. Non-oil sector up 6.2%. Oil obviously weaker, down 3.1%. Let me just start off by asking you, what are the biggest non-oil drivers right now for the UAE economy?
So the preliminary data that was released by the authorities on the website yesterday showed financial services actually being the biggest driver of GDP on the non-oil side in 2023, and that was really up sort of almost 15% year on year. So I think reflecting obviously outstanding earnings by banks, but also the growth in the financial services sector. So we've seen a lot of family offices, hedge funds, fund managers move to the UAE, both Abu Dhabi and Dubai. And I think that growth in those industries and also the associated services that would come with it, brokerages, insurance, all of that kind of stuff.
Yeah, it's interesting to see the real economy impact, because we read about all of these stories of the hedge funds, asset managers relocating and moving their offices to Dubai. Or opening up branches in Dubai and Abu Dhabi. But also I thought interesting that out of all of the Emirates, Abu Dhabi is the fastest growing in the non-oil sector, and it tells you about their ability to attract some of that inflow.
Absolutely. It's been the fastest growing Emirates in terms of non-oil sector activity, not just in 2023, but also 2022. I think last year it was over 9% growth in non-oil sector GDP for Abu Dhabi. And people tend to forget that even though half of the economy is oil and gas, their non-oil sector is actually bigger than Dubai's GDP. So it is a very, very important driver of overall national growth in the non-oil sector. Aside from financial services, we also saw a very strong rebound in transport and logistics. Also hospitality, and then of course construction and real estate, which you can see as you move around the UAE, the activity in those sectors. So I think that those are probably going to be drivers of growth going forward as well, particularly with all the big infrastructure projects that have been announced around Etihad Rail, Al Maktoum Airport. So we're expecting public sector investment to be a big driver of growth going forward.
I mean, there has been a lot of diversification and credit where it's due. But I do wonder about, the big question mark in the room, and that is the oil sector and where the growth is going to come from that. We have an OPEC meeting coming up. There isn't an expectation that production output is going to increase on the back of that. To what extent is lower production and prices around here going to serve as a headwind for the economies of the UAE and the Kingdom of Saudi Arabia?
So our forecast for 2024 doesn't actually assume any growth in oil and gas GDP this year. So we're assuming the production cuts or restrictions that were implemented last year are going to remain in place for most of 2024. They may start to unwind some of those cuts in the fourth quarter, but we think certainly at this meeting we'll probably extend them. Look, the UAE is investing in expanding capacity in oil production and other hydrocarbons. So I think that is going to drive some activity in that sector. But the key question is how long are they willing to restrain production significantly below their capacity? And I think this is something that OPEC Plus needs to decide. There are countries that are not able to meet their production targets, and there are countries sitting with excess capacity. So it's a question of how you reallocate those targets to take into account who actually has the ability to deliver that oil.
Have you done analysis on where the break-even level of oil is for Saudi Arabia? I mean, I know our own Bloomberg intelligence analysts have it sitting at around $105. What are the implications of having a break-even that's so high and above where the market is trading?
Our analysis is similar, and we're not even looking at PIF. We're just looking at the central government budget, and we're seeing a break-even fiscal oil price of just over $100 a barrel. So it means effectively that the government is going to run a deficit this year. We've got a deficit of 4.2% penciled in for Saudi. Look, they have very low debt levels, right? So their ability to continue to fund infrastructure projects is there, even with oil prices below their break-even point. We've already seen debt issuance from both sovereign and from PIF in the first quarter of this year. And of course, they do have significant assets that they can leverage, that they can monetize. They've got assets within PIF that are generating revenue through dividends and cash generation. They can IPO,
Aramco
they can sell, they can use those assets to raise bilateral debt or syndicated loans. So I think they have the ability to continue to fund infrastructure.
So this is a big picture question. When the UAE talks about diversifying their economy, when Saudi talks about diversifying economy, I think now the numbers, correct me if I'm wrong, but we're getting towards 50-50 of oil versus non-oil. What does that number look like in 2030?
So for the UAE, we're already well below 50% in terms of oil, non-oil. We're sitting at around 30% oil and 70% non-oil GDP. But the issue for diversification is not just about how the economy is structured, it's also how diversified our budget revenues. And the region as a whole still sees an over-reliance on oil and gas sales for budget revenues. So that has implications for sustainability of budget finances. So that's key. And that would involve broadening tax bases, raising alternative taxes, using investment income. And then the other aspect of it is looking at the current account and how diversified are export revenues. And again, when you look at the share of oil and gas in terms of GDP, and you look at the share of oil and gas in terms of export revenues, there's a big mismatch there. So the focus is not just on what does your economy look like, but it's where are you earning your export revenues? Can you diversify your exports away from oil and gas to services? And that's where tourism, I think, is going to be a big driver, because this is something that these economies can use to generate foreign exchange earnings outside of oil and gas, to create jobs for people coming into the labor market, and also then to generate tax revenues as well from those services.
Yeah, and always useful in a pegged currency too. Thank you so much for joining me. That was a really interesting chat. Khatija Haque, the Chief Economist and Head of Research at Emirates NBD. Now, Turkey's central bank is expected to leave its key rate on hold today at 50%. That's a high number. That's despite a possible acceleration in inflation this month to around 75%. So let's bring in Selva Bahar Baziki, our economist at Bloomberg Economics in Ankara. I was lucky enough to have a conversation with Dr. Fatih, the central bank governor, about a week ago at the Qatar Economic Forum. And he seemed to imply, or at least suggest, that going forwards, we should start to see a moderation in these headline inflation figures. So I read that as them perhaps implying also that they're happy with the level of rates and where it's sitting right now, unlikely to go for another rate hike at this meeting today.
That's exactly right. Good morning, Joanna. We think that even though inflation dynamics have been warranting additional tightening from the central bank, and past prints have actually exceeded the central bank's forecast by far so far this year, we have yet to see mid-70s in the print for May, but there will be deceleration in the price gains in the second half of the year. Even then, though, we are going to see a year-end print around 43% in our estimation, so that's still more than 8 times the central bank's 5% target. That means further tightening is warranted, but it's not going to arrive in the form of a rate hike. Rather, it's going to be the central bank tightening its alternative tools, that's higher reserve requirements, lower credit growth caps, and a very active use of its interest rate corridor, where the central bank shifts funding away from its repo window, where the rate is at 50% now, to the overnight lending facility, where the rate is 53. And we see the central bank doing that through the third quarter this year.
So let me pick up on a couple of things that you said. Your own analysis points to inflation of 43% year-end. I believe the central bank just revised their forecast to 38%, which many people are saying is out of sync with what market expectations are. So yours are higher. Interesting to point that out. But then also, what is the calculus for the central bank here on leaning on interest rate hikes versus these alternative instruments that you just described?
We've actually seen the central bank using these alternative measures since it started its pivot last year after the May elections. We estimate them to have added 380 basis points to the stance already. So even though the policy rate is at 50, the reference rate for the lenders are actually almost 400 basis points higher than that. And the central bank has been using this facility through the interest rate corridor too. We've seen it reach as high as 52.5, the average rated funding rate from the central bank earlier. So at times the policy rate was as if it was 56% recently, rather than the headline 50 that we see posted on the central bank. I think the central bank is trying to mitigate the impact that the tightening is going to have on growth figures going forward by resorting to these side measures rather than the key lever.
Yeah, fascinating context there. Thank you very much for giving us an overview of what to expect out of the Central Bank of Turkey later today. A Bloomberg economics reporter, Salva Bahar Raziki, thank you. Also coming up, for the first time in more than 16 years, an African leader is attending the White House for a state visit. More on that next. This is Bloomberg.
India decides. As the votes come in, can Prime Minister Modi win a third term? And what direction will India take next? With a focus on the economy, social divisions, and climate change actions that will influence the global story. Bloomberg's Haslinda Haman is live in Delhi, bringing you the latest updates as election results from the world's largest democracy are revealed. Coverage starts June 3rd on Bloomberg Television. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Well, we're just bringing you some live images of President Raisi's funeral that is taking place. This is the third day of mourning in Iran out of 5. And these are taking place in Berjand, which is one of the eastern provinces in Iran, the final destination per our own reporting, is that the president is supposed to be buried in Mashhad, which is a couple of hours north of where this funeral procession is right now. And of course, it comes on the heels of yesterday's funeral in Tehran, where prayers were led by the Ayatollah, the supreme leader Khamenei, in addition to many other foreign dignitaries who attended, including the leader of Hamas, Ismail Haniyeh, interesting to note, but also the foreign ministers of Saudi Arabia and UAE also in attendance. So some of those Arab leaders also showed up, not the senior leaders, but interesting to note that some representatives from those countries were there. So you can see images now of crowds thronging the procession as it makes its way through that part of Iran onto its final destination for burial. Well, for the first time in more than 16 years, an African leader is attending the White House for a state visit. Kenyan President William Ruto is visiting the U.S. as African countries forge closer ties with UAE, Saudi Arabia, Turkey, and India. Let's bring in Bloomberg's Ondiro Ganga, who's in Kigali, and just walk us through some of the highlights from President William Ruto's tour so far.
Jumana, I think, as you've said, the cherry on top of the cake is President William Ruto's visit to the White House. And from his joint press conference with President Joe Biden, you could get a sense that the U.S. is committed to partnering and working with Kenya, particularly in expanding its digital ecosystem for as long as Kenya continues to make the right investment in different areas. And President William Ruto reiterated that commitment, saying that the country will expanding their investment in things like digital technology to expand access to all Kenyans and tap into that digital economy. There was also several meetings with leaders in technology industry in the U.S., particularly the leaders from companies like Alphabet Inc. and Tineo, and the conversation was centered around cybersecurity and artificial intelligence. There was also some funding that has come from this trip, $32 million to go into STEM education from U.S. Agency for International Development. Coca-Cola committing 23 billion Kenya shillings over the next 5 years, and also there'll be multi-million investments going into Kenya from DFC, and that will bring the U.S. total portfolio in Kenya to about $1 billion.
What about the geopolitical angle here, Ondiro? I'm really curious to see how a visit like this plays into this idea that the U.S. are trying to rebuild influence in Africa.
We have to consider certain factors to be able to know for sure that the U.S. is trying to rebuild its influence. One of them being that there are new players on the African continent. For example, different countries from the Middle East. You look at countries like Turkey, you look at countries like the UAE, but not forgetting China and Russia that are constantly building their influence on Africa. If you look at Russia, they're growing their footprint in West Africa, where we've seen political instability, several military coups, and military leaders leaning towards Russia. China is dominant in key industries such as mining on the African continent. And you see the leeway that they used on the continent. These are countries that are saying, come as you are on the business table, you're a partner and an equal. The U.S., on the other hand, their money in partnership comes with conditionalities, one of them being human rights and touchy issues such as LGBTQ. African leaders want to be able to work with everybody to fuel their development needs without being brought into the geopolitical tension that the U.S. has with some of its partners. And also, if you look at funding, the UAE, very bullish, $46 billion pledged in 2023, investing in infrastructure, investing in things like renewable energy. China, $26 billion, but the U.S. only pledged $55 billion in 2023 over a period of 3 years. So President Joe Biden might be trying to rebuild those bridges, but he will need a clear-cut strategy on what their Africa plan is beyond aid and humanitarianism.
Very good to lay it out that way. Ondiro, thank you so much for the report. Bloomberg's Ondiro Ganga. Thank you. Now, also coming up, U.S. futures rally as Nvidia's upbeat outlook reinforces optimism for the global AI boom. More on the company's bullish sales forecast next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Well, more now on Nvidia's bullish sales forecast. Its shares in the chipmaker at the center of the AI boom surged in late trading in New York, up 6%. Bloomberg's Tom McKenzie joins us with more. Well, Tom, they blew out through earnings expectations, and expectations are pretty high to begin with. What stood out to you?
Yeah, look, there are earnings stories, and then there's Nvidia, and it stands out singularly on its own in terms of the importance for the global stock market, quite frankly, and specifically, of course, the AI revolution. So, first quarter, a big beat coming through, $26 billion US, but more importantly, arguably, was the forecast around the current quarter, so Q2, and the forecast there is around $28 billion US, again above the estimates. Just going back to the first quarter, that was triple of revenues coming through from the first quarter from this time last year. Again, the forecast around the second quarter as well. It's the data center division that is powering this company still, and the growth there just keeps coming through. Revenues coming through, 45% of their revenues still come through from the hyperscalers, so companies like Meta and Amazon and Microsoft. But interestingly, Jensen Huang, who described this again as a new industrial revolution, saying that the demand that they're seeing right now, he expects that to continue to outstrip supply into 2025. They're moving now. They're upgrading from their H100 chips. They've upgraded to the Blackwell chip. That comes online in Q4, and he says the demand for that is going to be red hot.
Tom, is there going to be an issue between how much demand there is? Can they meet all of this demand? Is there enough supply? Are there going to be supply chain problems?
Yeah, that's potentially a very small fly in the ointment for Jensen Huang and the team at Nvidia, because they are now building not just the GPUs, the chips, but also the complete computers, the services and the software. And the complexity of that means that the supply chains become more complex. And he addressed that issue. He said that is potentially a challenge. But for the moment, a big question has been, is demand going to start to soften? But no, he still says there's this constraint. They need to produce more to meet that demand. He sees that pushing into 2025. Also, worth pointing out, they came out with the stock split 10-1 as the stock is above $1,000 then after hours. And interestingly as well, ramped up the dividend by 150%, Jemana.
So lots in there for the retail investors as well. That stock split obviously directly playing into their hands. Tom McKenzie in London, thank you so much, and looking forward to your show in a couple of minutes' time. That is it for our show, however. That was Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Stay with us for Tom's show, Daybreak Europe. That's coming up next.